So a few things happen to say that there's going to be a downside break. Number one, the laser goes from red to green, which says that there's more stuck longs rather than stuck shorts. We want stuck longs if we want downside. So just over the last 2 minutes, there are more stuck longs when this laser, as I call it, that's this guy right in here, is green. Number one. Two, more longs just right in here. The greener this vertical is, the more bearish the market should be, especially as it's moving below these screens. The why should be understood if you watch these videos enough, because people who are long have to sell it to get out. So if there's more longs, there's more sellers. Got it? More sellers is pretty damn important for price to go down of anything. The other addition that we have is this guy right in here, and not getting into exactly what it shows or why it shows it. It shows downside and upside pressure. So when it's gray and you're short or looking to get short, that's what you want. You want it to be gray above price. This yellow line here is where price is currently trading right now. Below it and above it, you want to see gray. What it shows when there's gray above it, it shows the sellers are getting anxious. And when it's gray below it, it shows the buyers are getting comfortable. Well, hell, the buyers are getting comfortable, the sellers are getting anxious. That's a good high probability for downside pressure. We'll go over the red and the white another time, but green and gray is what you want to see. A couple other things that make this downside probable. You just left a big buy pulse of 100 lot and price goes underneath it. Punch a guy in the face and he doesn't flinch. Here's the other thing, context. Could you draw a congestion box? Well, you can right here. Look at this. You don't want to be, people who are long below the bottom here are in trouble. And then you go to your ancillary friend, the NASDAQ. Take a look at, they have a box that they could explode down and through. So you begin to build an idea and a story for, in this case, a breakout, which you should do for every setup and strategy you try to implement. You build out the story. I don't care if it's a short, medium, or long time frame hold. You still got to build it out. And when you're incorporating order flow and other people's positions and correlated markets and aggressive sellers, anxious sellers, all those things, damn, that's what's involved. That influences the movement of the price of anything. Tell me if there's a seller of a house and you've been able to identify that they're anxious because you found out they're getting divorced. That should make price go lower. It's information. Now, so we play it. I want you guys to see the, it really kind of get gray. It jumped, really get green in here and then gray below also. And I'll keep pausing it as we go in here. But at this point, I was saying from like in here, if we can't get through and break out, I'll shave. I don't know if it was my head or someone's head in the group, but I was making a joke and we missed it. All right. So watch how it gets greener. This laser gets longer, which means more longs are stuck. And any of the white, which is what you don't want to see, you don't want to see any white for downside, pretty much disappears right there. You don't have to wait down here to get short, right? You should be short as it you have some money into it as it starts to curl and you start to see the beginning of what you want to see. This point is where you could be comfortable because you got over here the NASDAQ starting to move through the bottom of their box and really piss off longs. And then you have everything lined up for this market to move down. What's really good about knowing, and then you finally get the flush, and it doesn't feel like a guess, but what's really important about having all the right ingredients for the market to move lower, it's also telling when it doesn't do what it should do, because now you know what it should do. If you have the right tools and just instances, what you're using, and it's the right tool, then your prediction and probability that isn't coming to fruition is also information, because it allows you to give you a proper timing. It allows you to say, it's not doing what it should do. Look out. I'm looking for momentum. I'm not getting it. So the reason why the price of anything breaks out down or up fast is because most people aren't short. If a lot of people are short in here, it's not going to go down because shorts are buyers. So you don't want the competition of shorts for a downside breakout. You want people long. You want people who are so um so kind of shallow, thinking, hey, look at all the times it held as great support, and they buy it, and now they're stuck, and they help facilitate the downside. More longs equal more sellers. So when you listen, when it's obvious that there's support, guess what? Guess who it's obvious to? Everybody. And you can't have too many shorts playing a downside breakout or it won't work. You can't have 5 guys. Let me revise it. You can't have 50 guys in a bar trying to pick up 2 girls. Not going to work. For the other 48, maybe for me, but you can't. You got too much competition. That's the point. Too much competition. You've got to put yourself in a position to understand that and read that. Too many longs is what you want for this box to get penetrated and moved to the downside. All right. And then you get a nice iceberg. And then there was good examples that was going to keep this market at this point bearish, right? And I think what the problem is that people get when they trade is they want to put something on and like, well, it's not enough. If they're only going to get paid if it's an uptrend or downtrend, which happen very few days. So people that have trades that they need a trend to happen in order to get paid, they're in trouble because trends don't happen. What, 20% of the time we're going to get a day that pretty much just rallies all day or breaks all day? That's a smaller part of how every day is. So if you need that, if you need big moves in order to make, you're going to be taking a lot of heat when you are right. You're going to be holding on to positions for multiple days sometimes. So just understand what kind of trade you're in and what you're looking for. But it doesn't matter what your time horizon is. The whole definition of a good location is for price to start going your way ASAP. Faster it goes your way, the better decisions you're able to make because you're making decisions with money on the table, with a stack of chips. Do you want to be at the poker table with a little stack or big stack? You want to have money in front of you. And so if you're already short from above, it's easier to ride this down and to see what you'd want to see to stay in it. First, you get this iceberg chasing it and price stays below it. You get the greens that still come out. These little gray lines in here are longs trying to get out. You got the gray clouds. You got all this gray above and gray below, right? Anxious sellers, comfortable buyers. And then as soon as this white comes in and red comes in, we bounce. And it's not like we bounce and it's the dead low, but there's no coincidence that if I play it, as soon as white comes in about 85, we see it 85 half, it rallies a few points, right? All right. So you get the gist of what we're talking about here and what are the right tools, reading order flow, the intent of an order, the intent of the order turning into a position, the intent of the order closing a position. That's order flow. Anybody that doesn't talk about order flow under those umbrellas, they probably struggle spelling order flow, let alone being able to intelligently speak of it. Order flow is about reading not only when they come in, but what the price's reaction is to an order that gets filled, one that's not filled. Is there an intent? Does it open up a long or short position? Where is that on the chart? Exits, stops. People use stops for what? To get out of trades, for losers. Where's that taking place? Right? And so stop worrying about what your emotions are and start reading the market based on what their emotions are.